silver is so low relative to gold is telling me that the public is not really cognizant of this yet. And
Right.
usually they don't wake up slowly, right? They wake up slowly from let's say a COVID illusion when then it takes years for them to get out of it.
Right.
But when they panic, as they will panic when they go into silver, it's not going to be a slow panic. It's going to be a fast panic because the silver is their money. So it's going to go from, what is it, 32 to, I don't know, $400 or $500 in a few months. I don't know. Maybe it's going to go to 100 first, but
Right.
whatever it's going to be faster than any of us expected.
The rally in gold prices has been undeniably stronger so far this year, leaving silver to lag behind. While gold continues to capture the attention of investors, there are growing signs that silver may soon experience its rally. Silver has had to navigate challenges, including tariff volatility, but it has steadily regained momentum despite these obstacles. This suggests that a potential breakout for silver is on the horizon. Analysts are now paying closer attention to the white metal as it shows signs of breaking free from the constraints that have held it back in recent months. Many experts believe silver is significantly undervalued, with its current price still well below its historical role as both a store of value and a critical industrial asset. Renowned analyst Rafi Farber argues that the gold-to-silver ratio is a crucial indicator of silver's undervaluation. The ratio, which compares the price of gold to that of silver, remains unusually high, signaling that both institutional investors and the broader public currently overlook silver. While gold remains the go-to asset for many investors during times of uncertainty, Farber believes that the rising risks associated with fiat currencies will eventually cause the public to turn towards silver as a more tangible and secure store of wealth. Farber predicts that this shift in sentiment could result in a significant surge in demand for silver, driving its price up sharply. He suggests that silver could rise from about $30 per ounce to potentially $100, $300, or even $400 per ounce, spurred by panic buying and a collective rush to tangible assets in response to financial instability and inflationary pressures. In addition to its price potential, Farber highlights that silver's true value lies in its tangible physical nature, making it distinct from paper currencies and other financial assets. Unlike fiat money, silver is an asset that can be stored, held, and physically controlled outside of traditional banking systems, offering investors a hedge against potential currency devaluation and financial system collapse. Furthermore, silver's industrial applications, particularly in electronics, solar energy, and other high-tech sectors, provide a solid foundation for sustained long-term demand. Now, we present the clips from Rafi's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I don't see the dollar as money. I see gold and silver as money. I don't see investment opportunities. I see divestment opportunities, right?
Right.
When you're on the summit of a huge pyramid, of a huge mountain, like, could you stick like a pole in the mountain and then climb the pole and get even higher? I mean, you could build the mountain even higher and like try to take dirt from a few feet below you and just like pile the summit a little bit higher just so you can say that you went a little bit higher in the mountain. But
Right.
like, is it really worth it? I mean, you're gonna fall, and if you fall, you're gonna fall down the entire thing. So if you're asking me like what opportunities do I see to invest, you're like, I'm picturing it like I'm on a mountain, I'm on the summit, it's very hard to breathe, and I'm not saying you're asking me, you're just asking me, you're just an interviewer, you're asking me a
Right.
question.
Right.
When I'm asked that question, it's like I'm being asked, well, how much higher do you think you can build this summit? And then so you can tiptoe slightly higher so that you can say I got even higher than the peak of Mount Everest because I want to
Right.
be in the Guinness Book of World Records. Let's say I did it, and then there's a slight breeze, and then I fall over and kill myself. So I don't want to do that. I want to get down. I want to
Right.
climb down. I don't want to invest in anything. And the dollar itself and the Canadian dollar and all other currencies are an investment. Holding cash is an investment in what? An investment in the debt of the government, of the central bank that issues those liability units in exchange for the debt of that government. It's an
Yeah.
investment in the debt of the government. I don't want to invest in the debt of anybody because I know it's all going away. I want to divest. So you asked me about silver. What signal is it telling me that the gold to silver ratio is so high? It's telling me two things. And I don't know which proportions it's telling them to me in, but it's telling me two things. I don't know which one is stronger. Either the banks, it's telling me that the banks are getting worried about the banks that own the gold derivatives, and a lot of the banks hold the physical. You know, JP Morgan has like a whole bunch of metal in its vaults. So banks do own, or they custodian the physical, and they have claims to the physical through the futures. Whatever, whoever owns the gold is saying, I don't really trust this paper anymore so much, so I'm going to pay more for the I'm going to pay more of the paper for the gold. And the fact that the silver is so low relative to gold is telling me that the public is not really cognizant of this yet. They wake up slowly from, let's say, a COVID illusion when they so then it takes years for them to get out of it.
Right.
But when they panic, as they will panic when they go into silver, it's not going to be a slow panic. It's going to be a fast panic because the silver is their money. So it's going to go from, what is it, 32 to, I don't know, $400 or $500 in a few months. I don't know. Maybe it's going to go to 100 first, but
Right.
whatever it's going to be faster than any of us expected.
The US dollar has been facing significant challenges this year, with the US dollar index dropping by 7% year to date, one of its steepest declines in recent history. This index, which tracks the dollar's value against 6 major currencies, reflects growing concerns over the dollar's long-term strength. These worries have intensified due to escalating trade tensions between the US and several key global players, including China and the European Union. As these geopolitical and economic strains mount, many investors are beginning to lose confidence in the dollar's stability, leading them to look for alternative assets like gold and silver, which have historically been seen as safe havens during currency uncertainty. The increased demand for precious metals in response to dollar instability underscores a larger trend away from fiat currencies. Unlike the dollar, gold and silver are finite resources that central banks can't arbitrarily print, giving them inherent value and making them attractive during times of inflation or financial turmoil. Meanwhile, the repo market, where banks lend money to each other overnight, has recently seen its highest activity level, indicating increasing liquidity problems in the financial system, which could lead to a larger crisis, driving further demand for gold and silver. If the dollar continues its downward trajectory, the value of these metals could surge as investors seek to protect their wealth.
Always answer it in different ways. I guess the way that I'll answer it now is, the question is how much is the dollar going to be worth by the end of 2025? And it could be worth zero. I mean, once the dollar is worth zero amount of gold or silver, then credit is dead, because the dollar is the chief credit unit of the world. The dollar is not money, it's credit. Credit is a derivative of money. Credit is a promise to pay money later, and that's what the dollar is, right? When the Fed brings a dollar into existence, they are issuing a liability. The dollar is their unit of liability. They're issuing a liability for the asset that they buy, which is the federal government's debt. So the dollar is just credit. There's no money there. A liability for what? What is the dollar a liability for? What are they liable for? And people who believe in fiat money say, well, they're liable for nothing because it's a fiat currency, so it's an IOU nothing, and that's sort of true, but it's not really true, because what the dollar is a liability unit of gold. That's how it is. And then just because the Fed decided a fiat currency, right?
Mm-hmm.
The essence of the thing itself. It's not that humans aren't magicians. We can't just say abracadabra and something exists. We can't say abracadabra and then prices are established, right? We
Right.
can't just say abracadabra and we float in the middle of a gravity planet. It doesn't work. What you can do is you can say, well, we're not going to pay you gold for this dollar. We're just going to the central bank, the issuer of the dollar, is now going to just issue more and more dollars in exchange for federal debt. And then, as long as we're in a tug of war of debt, that tension of the creditor and the debtor pulling on each other and demanding dollars for these relationships, that's what keeps the fiat currency alive. But essentially, it's gold and silver. So you're asking me, what is the gold and silver value of the dollar going to be by the end of the year? I don't know. It's going to be lower than it is now. But is it going to go to zero? It could. It could go to zero, and that's the end game. When it goes to zero, then nobody can use the dollar for anything anymore because a credit that is not worth any amount of gold or silver means credit that is not worth any money. So credit's
Right.
not that's not worth any money is dead credit. Dead credit is like you default on your credit card. So therefore, what does the credit card company do? They say, well, we're going to write that off. That's not our asset anymore. It doesn't exist. So once the dollar is no longer worth any amount of real money, which is gold and silver, the credit erases. And then everyone who thought they had purchasing power has zero purchasing power. And you move into the end game, which the more people that have any amount of money, the easier it will be. But it's going to be hard however we do it. How could the dollar become 0 grams of gold and silver by the end of the year? Simple. We have the situation now where as of Friday, right, the amount of repurchase agreements that are taking place between banks every night hit a record on Thursday, actually hit a record of 2.83 trillion. Now it's 2.79 trillion, something very close to that.
Wow.
And there's only about $3 trillion of reserves. The last repocalypse, the last clog in the banking system happened at 83%. We're way above that now. We're at 94, 93, 94%. Now, that can still work because there's still enough dollars, but once you get above 100%, that's a problem.
Yeah.
And then the repo market collapses and the Fed has to buy the difference. So that's going to happen very soon. And when it happens, we don't know how much they're going to have to expand the balance sheet this time. It's going to be by trillions. And if it's going to be by trillions, then the reaction is going to be in the gold and silver market. How low is the dollar going to go? We don't know how many more rounds of this. I think this is the last round of it. Some people think there's going to be more rounds. I'm prepared for either one.
Silver prices are projected to experience upward momentum in the coming years, largely due to increasing industrial demand, particularly in sectors like renewable energy and electronics. As global economies continue to face uncertainty, including potential currency depreciation and geopolitical risks, silver will likely become a more attractive asset for investors and industries seeking to diversify their portfolios. With its dual role as both an industrial metal and a store of value, silver is poised to benefit from broader market trends, including inflationary pressures and shifts in investor sentiment. Experts suggest that if these conditions persist, silver could see significant price growth, particularly by 2025, making it a key asset to watch in the precious metals market. As inflationary pressures rise, do you consider silver a more viable investment than other precious metals like gold? That's it for today. Share your thoughts in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.